If you've got a savings account here in the UK, you're going to want to listen to this. The 2025 budget has just dropped a whole series of changes that could have a really big impact on your money. So we've teamed up with the experts over at My Tax Accountant to break down exactly what this tax crackdown means for you.
So let's just get right to it, shall we? Is your savings account about to get hit with a tax bill you weren't expecting? Well, the answer isn't a simple yes or no. It's a bit more complicated, and that's why getting your head around these new rules is absolutely crucial.
Okay, here's what we're going to walk through. We'll kick things off with this new era for savers. Then we'll look at some powerful new tools HMRC has. After that, we'll dive into the big ISA shakeup, explain something called the fiscal drag trap, and give you a toolkit for your tax-free savings. And finally, we'll pull it all together so you know exactly how to navigate the new rules. Right, let's start with the big picture. The 2025 budget really does mark a massive shift. You see, the government is trying to close tax loopholes and, frankly, bring in more money. For you and me, that means a much stricter environment for our savings.
And you know, the most important thing to grasp here is that this isn't just about going after the super rich who are hiding money offshore. Not at all. The government is tightening the net, and these changes are designed to catch everyone, from a freelancer in Manchester putting money aside for their tax bill to a retiree in Cornwall who's been carefully saving for decades.
So, what's the first major change you really need to be aware of? Well, it's a very powerful new tool for HMRC, and it's called Direct Recovery of Debts. You'll probably hear it called DRD for short.
And here it is, the new reality. HMRC can now literally take money directly out of your bank account to pay off a tax debt. This is a huge expansion of their powers, and it's so important that you understand how it all works.
So what is this DRD thing exactly? Well, it's a power that lets HMRC take tax debts straight from your bank, your building society, even your ISA accounts. But here's the real kicker. They can do it without getting a court order. That makes the whole process way faster and much more direct. Now, they're not going to use this power for just a few quid. It's reserved for debts of over £1,000. But you know, while that might sound like a lot, a simple mistake or a miscalculation on a tax return could easily push you over that threshold and into the danger zone.
Okay, to be fair, there are some safeguards built in. HMRC has to follow a really strict process. They've got to try and contact you multiple times. We're talking letters, phone calls, text messages, and they even have to send someone to visit you in person. Only after all that can they freeze your funds and then take the money. But stay with me, there's another crucial safeguard you absolutely need to know about.
And here is that key safeguard. HMRC will always leave you with a minimum of £5,000 across all of your accounts combined, so they won't clean you out completely. But still, it means a pretty significant chunk of your savings is at risk if you find yourself with a tax debt.
But that's not all, not by a long shot. While HMRC is making it easier to take money out of your accounts, the 2025 budget is also making it harder to put money in tax-free. That's right, they're taking aim at one of the UK's most popular savings products, the ISA. Your tax-free shelter is about to get a lot smaller. And here's the biggest change, a massive cut to the cash ISA allowance. It's being slashed by 40%. It's going from £20,000 a year all the way down to just £12,000 a year from April 2027. That is a huge reduction in your ability to save tax-free. And of course, the government is already thinking about how people might try to get around this. They're closing loopholes left and right, banning certain types of transfers, bringing in new charges, and they're even going to run tests on investments to see if people are trying to sneak cash into other types of ISAs. The net is definitely closing. But listen, here's a pro tip for you. There is a small window of opportunity before these changes kick in 2027. You can still use the full £20,000 allowance for this tax year and for the next one. That means you can shelter £40,000, completely tax-free, before that new lower limit starts. Okay, now let's talk about a hidden threat, one that's a lot quieter, but believe me, it's just as significant. It's called fiscal drag, and it's basically a stealth tax. It's catching millions of people. You might not even realize it's happening to you. And the scale of this thing is just huge. Because the government has frozen the tax thresholds, even a small pay rise from inflation can be enough to push you into a higher tax bracket. The results? Well, the Office for Budget Responsibility is forecasting that millions more of us will be paying more tax without the actual tax rates ever changing. So with all of this going on, what on earth can you do about it? Well, the very first step is to really understand the tools you have in your corner. When it comes to your money, knowledge really is power. And one of the most important tools is your Personal Savings Allowance, or PSA. This is how much interest you can earn from your savings, tax-free every year. But look at this. As you move into a higher tax bracket, your allowance gets chopped in half or disappears completely. This is where that fiscal drag we just talked about really starts to bite.
Let me give you a real-world example. Let's meet Sarah. She's a freelance designer from Manchester, and she's just had a really good year. That extra bit of income, combined with those frozen tax thresholds, has just nudged her over into the higher rate tax band. So let's see what that actually means for her savings.
The impact is just staggering. She earns the exact same amount of interest from her savings, £1,500, but just because she crossed that tax threshold, her tax bill on that interest has quadrupled. It's gone from £100 to £400. That is the power of fiscal drag in action, and it's happening to millions of people all over the UK.
So after hearing all that, what can you actually do? Okay, in our final section, let's pull all this together into a clear action plan to help you navigate these new rules and protect your hard-earned cash.
All right, let's do a quick recap. First, HMRC has more power to take money directly from your account. Second, your ISA allowance is shrinking. Third, fiscal drag is quietly pushing millions of us into higher tax bands. The bottom line is this: you just can't afford to sit back and do nothing anymore. Proactive financial planning isn't a luxury, it's an absolute necessity.
Now, before we finish up, just a quick and important note. The information we've gone through here is for general guidance only. Everyone's financial situation is unique, so you should always seek professional advice before making any big decisions.
And for that kind of personalized, expert advice, we highly recommend speaking to a professional. The team at My Tax Accountant are specialists in this field, and they can really help you navigate all of these changes. You can get in touch with them on 0208 570 8531, or just drop them an email at info@mytaxaccountant.co.uk. Thanks for joining me.